Welcome back. We are on countdown mode. We are a minute and a half away from the July jobs report. Economists are expecting 110,000 jobs added to the economy in the month of July, with the unemployment rate ticking higher to 4.2%. We are waiting on the numbers. Let me bring in Macro Mavens President Stephanie Pomboy, Heritage Foundation economist and Trump economic advisor Steve Moore, American Staffing Association board member Joni Biley, and ER Shares CEO Joel Schulman. Also with me, Charles Payne and John Lonsky. Thanks, everybody, for being here. John Lonsky, what are you focused on in terms of the jobs numbers coming out in about a minute's time? What will you be looking for most important?
Private sector payrolls. You know, despite how overall jobs growth came in at a greater than expected 147,000 in the month of June, private sector payrolls were lower than expected. That gain was only 74,000. If we have another increase by private sector payrolls of fewer than 100,000 jobs, that tells us this labor market is softening, and that also implies that perhaps the Fed might be compelled to cut rates at its September meeting. And let's not forget about that unemployment rate, too.
Yeah, that's a great point. Charles, similar story there that you also mentioned the same thing. Steve, anything else that you want to look at in this upcoming report? Real quick, we're only 30 seconds away.
Yeah, real wages. Are Americans getting a pay increase? We'll find that out very shortly.
Yeah, we sure will. The expectations call for 110,000 jobs for the month of July. The unemployment rate at 4.2%. We're looking at markets this morning down 400 points on the Dow Industrials going into the number. The NASDAQ down about 200 going. 73,000 jobs. 73,000 jobs created in the month of July. Number just coming out.
And that's total.
4.2% of the unemployment rate, right in line with expectations. Here are the numbers. For the month of July, jobs came in at 73,000. That was lower than the expectation, which called for 110,000 jobs. The unemployment rate right in step with expectations at 4.2%. Steve Moore, your reaction.
Look, I think this is all a result, this disappointing number is a result of all the turmoil over tariffs and the trade wars. And that's sort of good news and bad news, because guess what? In just the last few weeks, Trump has racked off a lot of victories here. As he gets more victories with the Europeans, with Japan, with the UK, I think that's going to settle things. And then that kind of turmoil will be over. So I think that this is kind of a blip. And so I'm still very bullish on the U.S. economy, but this is a disappointing number. I'd love to see what the number was for private sector, as John was saying. Is it private sector or government? I want to see the government employment number down, because remember, under Biden, so much of the job creation was in the government sector.
Yeah, go ahead. Joel Schulman, did you say something?
83,000.
Charles, was that you?
83,000 private sector.
Yeah.
I want to push back on that. I think this is more about the Federal Reserve. Again, we've got a bifurcated economy. The Fed they have a regressive approach here, right? They're trying to still clamp down on this economy, but it's not working. It's hurting 70% of the folks out there. Look at delinquencies. Look at all of the things that are hurting the average household, I think, and also small businesses. Coming into this year, the biggest question was, how would they even refinance? We're talking about financing government debt. How do we help the small businesses out there? There are two economies. The Fed's looking at the wealthiest folks out there and thinking it means everyone, and I think that's hurting the jobs market more than anything else.
Yeah, it's a great point, and I agree that this report is so critical for the Federal Reserve's next move. Stephanie, how do you read things?
Well, I'm just stunned at another number in this report, and that is the downward revision to the June figure from 147,000 to just 14,000. So looking over the last 3 months, we've got 73,000 in July, 14,000 in June, and 19,000 in May. Those are incredibly weak headline numbers, and that's the total, not just private jobs. So this is a very soft report. And I guess what I'm really blown away by is that July generally is a report where the seasonals are such that you can surprise on the upside very easily, because 1 million people roughly drop out of the labor force with the school year, the school vacation. So that sets a very low seasonal bar for the data to clear, and clearly we tripped over the bar. So this is a very weak report. And sorry.
Go ahead.
Okay. And I guess, it certainly strengthens the argument materially for the Fed to cut rates. It's interesting because one presumes they had at least some of the preliminary components of this report when they were in their meeting on Wednesday and made the decision. They probably had an early look at this. So that probably is one of the reasons why you had the two dissents. But amazing that Powell stood firm despite that in the face of this data.
Well, it's a great point that you make because these downward revisions show a lot more about this economy in the last couple of months. And if we're learning this now, in the first day of August for the month of July and the month of June, that things were weakening, Jay Powell had access to that. How is it possible that he went forward and did not cut interest rates even as he saw all of this data, Stephanie? Yes, that's why we had two dissenters, Mickey Bowman and Christopher Waller.
I think that Trump kind of put him in a position where he had to stand firm. Otherwise, he would look like a total pushover. So ironically, by putting all that pressure on him, the president may have actually reinforced Powell's determination to stand firm in the face of data that clearly indicate that he should have been moving in the other direction. But as you said, Powell's always too late. And frankly, that's not just a slight against Jay Powell. The Fed is always too late. They always overstay accommodation and create some kind of massive bubble. And then when that bubble bursts, they act like they're shocked that anything adverse happened. And they run in and they put way too much stimulus there. And the next thing you know, we've got another, recession on our hands. So they either are too tight or too easy, but they just can't seem to get it right. And I think it is definitely time to do a deep review of the Federal Reserve and look at really, as Charles has talked about, the incredible damage that the Federal Reserve's policy has done to the middle class of this country. I mean, it is responsible, in my view, for this yawning gap between the high end and the low end. And with each serial monetary bailout, they expand that wedge even wider.
And Powell has everything to do with housing. I mean, the housing story is so significant. A mortgage is out of reach for so many people at this point. So the July labor force participation rate coming in at 62.2%. We've got downward revisions. And, of course, the July number, weaker than expected, coming in at growth of jobs of 73,000 jobs versus an estimate of 110,000 jobs. Let's get a look at where the jobs were. Joni Biley, who is hiring these days?
Yeah, well, Maria, and I have to say, we've been seeing weakness in this job market really since 2022. We've been looking at most of the job growth has been coming from the healthcare sector. It's been coming from leisure and hospitality. And we know it was from government. Like, that's where the jobs were over the last 3 years. And it is surprising that the Fed hasn't seen more weakness over the past few years. We haven't been adding jobs in professional business service sectors. Retail, has been up and down, but there's been a tremendous amount of softness in the job market. So I think today's report is really going to shed more light that this was a very weak report. The revisions, certainly to May and June, are very concerning. I'm surprised unemployment is just at 4.2%. I know that, they're looking at that number, but they need to look at the whole picture. We do see a softening market. Now, there are jobs out there. I know you did ask me about that. There's still opportunities, like some of the hottest jobs, nurse practitioners, physician assistants, data scientists, analyst roles. But these are really skilled, high-level positions. These are the top occupations that are growing, and we need to get more people into these fields. They pay six figures, but a lot of those entry-level positions, Maria, are going away. So I am concerned about the labor market, that we need to get more people in trades and in skilled roles, because that's where the jobs are.
Well, for sure. And I think, to discuss the healthcare, the marriage of healthcare and technology is huge, and that is creating lots of jobs. So you mentioned things like nurse practitioners and nurses and physician assistant jobs, which pay big numbers. I also want to mention some of the trades jobs, because this is part of President Trump's agenda as he is tapping into the energy capacity of this country with oil and gas and nuclear and all the rest. You're seeing job needs for electricians, plumbers, engineers, and these are also high-paying jobs. We don't have enough electricians. So there are opportunities there, not to mention all the tech names. Joel Schulman, that's what's been driving these stocks.
Right.
The market, the NASDAQ, up better than 35% just from the lows on April 8th.
Yeah, well, a couple of things. So AI is a big factor here. So a couple of things related to that. One, it's not the number of jobs so much as it's the type of jobs. And people have been talking about the gap between the richest and the poorest, and that gap's going to widen. A couple of things. One, entry-level jobs are being decimated by AI. So the entry-level jobs, particularly for college grads, the inexperienced people are going to suffer in this market. On the other hand, those with experience are benefiting with AI. And so those at the high end of the curve, the baby boomers with the experience benefit with AI because they're able to get rid of all these sort of mundane tasks they no longer want to do. Now, as we translate that to corporate America, what's happening is the richest companies are able to employ AI effectively. Probably the biggest impact we've seen since the 1980s in terms of what's happening with technology and how it's helping companies. So in the 1980s, we had spreadsheets that were able to wipe out entire rooms of analysts. Now we're seeing AI do the same sort of thing. And so what we're seeing in the marketplace, particularly for tech companies, we saw Meta yesterday. This morning, you're going to hear about Reddit coming out. It's up 26% in the last 3 days. It's up 14% pre-market. These are companies that are benefiting from AI, and they're not hiring as many. They're not laying off necessarily. There are a number of companies laying off, but they're hiring fewer people, particularly the inexperienced people. This is benefiting technology companies. It's widening the gap between the have and have-nots. And so we're going to hear more about that. And I think this number is going to force the Fed to cut more sooner. So we're going to see, we don't have a meeting in August, but September, October, not November, but December, we may see 3 rate cuts. I think this number is going to push them to action.
All right, so you think we're going to see 3 cuts just in the next couple of months before year end? Look, everything we were focused on is materializing at what we expected. Government jobs are down. Government down 10,000. State and local education jobs down 11,600. Private education services up 5,800. Healthcare up 55,400. So again, President Trump's goal of having the private sector, private enterprise, lead this economy is materializing. That's what he said in my interview back in March earlier this year. He wants private enterprise to rule the day, Charles, not big government.
Absolutely, and then that's what got us here, right? That's what propelled America during the second industrial revolution to this point where we are now. And then, of course, the McKinley era, which lasted almost 40 years of prosperity, cemented our role there. And we've given it a lot of that up in the last, for whatever reasons, we've given a lot of that up. The notion that you can even pull yourself up by the bootstraps, that's being rekindled. But it's a transition, and we have it on 2 fronts. We have to make the transition, and there's a lot of forces out there against it. And then also we have to sell it to the public. By the way, Stephanie mentioned the June revision. May was revised, too, from 144 to 19,000. So we're talking about 291,000 fewer jobs in the last 2 months than we thought we had. So this should spark a fire under the Fed. Yeah, Jay Powell knew. I'm telling you, I aired that Q&A session. He mentioned that he acknowledged labor weakness, but not to the degree he should have. This is ridiculous. And by the way, we're going to start seeing spending numbers and all that come down a lot. August is traditionally a weak month as September. We start pulling back in this market. The stock market is the greatest percentage of the wealth effect that it's ever been.
Yeah,
if the
no
stock
kidding,
market
that's right.
pulls back, those rich folks that have been holding us up, they're gonna pull back, and we're gonna see some sharp declines in retail. They'll blame it on tariffs, they'll blame it on everything else, but I'm telling you right now, it doesn't have to happen.
Well, I mean, Steve, no wonder the market was down 300 points going into this number. Look at these revisions.
So I guess I have a little bit of a different take on this. First of all, I'm very bullish on the U.S. economy. I mean, the thing that's happened in the last 6 weeks that has really been an inflection point on the economy, and we'll look back at this and say, this was amazing, was we passed the tax bill. Remember, that was just a month ago. And Trump has won significant trade deals with the Europeans, with the Brits,
no, I agree with that.
many of the Asian countries. Now, those are really bullish things. Now, I disagree with Charles. I think the main reason we saw weakness in those numbers in March, April, and May was because of the trade turmoil. I talked to small businesses all over the country. A lot of their factories came to a standstill. They didn't know if they could get their parts in. They didn't know what was going on. You know, with threats of 50% tariffs and so on, there was a lot of turmoil. My point is that a lot of that turmoil is now behind us, and I think businesses are going to be much more optimistic now that we got these trade deals in hand, which, by the way, Maria, lower the tariffs that other countries are imposing on our agriculture industry, our dairy, our technology companies. All these things are so positive. So I think this is kind of rear view. Now, on the Fed, okay, I'm fine with cutting the rates 25, 50 basis points, but much more important, if you want to grow this economy, you want to cut government spending. That's even more important than cutting interest rates because we still have a massive debt. We have overspending in Washington. And as good as that bill was that we passed, the big, beautiful bill, we did not cut government spending enough. And the government spending and debt is a weight on the economy right now.
Yeah, and they're going to try to continue cutting for sure in their next efforts later on in the year.